Hi, I'm Brad Rosley. Thanks for tuning in again today to another episode of Smart Money. I'm a certified financial planner, and I've always wanted to give back and help people and teach them. My mother's been a school teacher for 40 years, and she's always ingrained in me to help others. So today, I want to impart some wisdom on how I personally invest for not just myself, for my sister, for my mother, for my family, and also for my clients. I have a thriving financial planning practice in Illinois, and I work with people all over the country with their financial planning, their investment management. Today, I want to talk about 4 strategies that I use to invest and grow money without paying current taxes. 4 ways that you can use as well. The first one is the most common. It's called a 401k. I use a Roth 401k. I use the Roth because these are historically low income tax brackets. I'm okay with paying the tax now in my 401k, so I do not take the tax deduction. If your employer offers you a 401k, they may offer you a Roth 401k with the same investment options. The difference is you do not get the federal income tax deduction on the money that you contributed into the plan. Why would I do this, you think? To ask, well, that's a good question. The reason I do it is simple. I want to have a large basket of money, my 401k, that's all mine to take from when I retire. With people with a traditional 401k, you may not know this, but you have a partner in your balance. Whether your balance is $100,000 or $1 million, the government has a stake in your 401k. Depending on your tax rate, when you take that money out, they're getting a chunk of it, whether it be 10, 20, 30 or more percent, depending on what tax rates are at that point in time. The reason I love my Roth 401k, I pay the tax now at a historically low rate, and I don't pay tax again. It grows tax deferred, comes out tax free. That's my first one. My second idea, I've been using for 22 years because my oldest child's 22 years old, and that's his college savings program, his 529 plan. Again, I invest with after-tax money. With the exception, I'm in Illinois, I use the Bright Directions program, which gives me an Illinois income tax deduction on the first $20,000 a year that I put away for my kids. I've got 3 kids that are all currently in college right now. One at DePaul, one at University of Minnesota, and one at Colorado State in Fort Collins. So for my 3 kids, I've been putting away a little bit of money every month from the time they were born, and I get A, the tax deduction going in, and B, that money is not taxed as it grows. So I've been investing it very aggressively. I've had 6 figures in those accounts where I've made thousands of dollars in a given year and not had to pay any current income tax. When the money has come out, I pay for my college kids' dorm room, for their apartment, for their food, for their books, and of course for their tuition, all income tax free. Again, there have been years where I made thousands of dollars of growth and never had to pay any income tax on that money. That's 2. The third one, health savings accounts. I've done several videos on these. Love them. I have a high deductible qualifying health plan that allows me to set up a health savings account, also known as an HSA. Because I'm over 50, I can put over $8,000, $8,100 I can put into that health savings account this year. Federally tax deductible. Whoa, that saves me quite a bit of money in taxes up front. Guess what? I take that money while it's in a bank account and I transfer it under the HSA umbrella into a brokerage account. Once it's in there, I buy stocks with that account. I've owned some real high flyers that have done quite well. I just did a video about this. I've got 6 figures in this account now too. Again, I started it years ago, so it didn't happen overnight. But I started it years ago, and what I do is I don't use that money unless I absolutely have to. So when I get a checkup, if I have to pay for that, I pay for it out of my other checking account and leave that account balance to grow. Why? Because I'm not paying tax on the growth. And as I have this massive account balance, I'm going to use it one day when I need it, or my wife needs it when we're much older, and we need a knee replacement, or we need to pay for Medicare, premiums, long-term care related expenses, I'm going to have this giant wad of money that I can use. And when I take it out of there for a qualified medical expense, no tax again. So I'm growing money now in 3 different places. I'm growing money without getting a 1099 tax bill at the end of the year. And also in all 3, if I use them appropriately, I'm not paying tax when I take it out either. My 4th way is through real estate. I own several multi-unit buildings, of which generate positive cash flow that would ordinarily be taxed as income. But most or all of that income is offset by the depreciation I get on those buildings. So while I'm making income and paying down the debt on those buildings, the depreciation is an expense I can use to offset the income, therefore no tax. So that's my 4th way that I'm growing wealth super tax efficiently. You can do this too. Start now. That's the best advice I can give you. I started young, I've done pretty well. I continue to use these same strategies every year. I'm still funding my Roth 401k. I'm still funding my HSA. I'm still funding my 529s. And I'm still looking into getting more and more real estate every day. So those are some good strategies that you can look into. If you have questions, feel free to call my office. Fortune Financial Group is the name of my company. I'm in Glen Ellen, Illinois. And I wish you the very best in investing, and keep more of your hard-earned income. Keep more of your investment money by following these types of strategies. I wish you well. Work with your accountant to make sure these all work with you. Have a great day, and thanks for listening.